Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for Tuesday, the 3rd of May, 2022, 5:20 p.m. Central Time. Well, not much that I'd want to do in these markets and the stock indices and some of the others right now is tomorrow you get the big day. The FOMC meeting ends. We get at 1 o'clock in the afternoon the Fed announcement on the monetary policy. Then Fed Chair Powell at 1:30, and these are all Central Time, comes on, answers questions, and explains the policy that has been set up. So where do you go with all that? Well, sometimes it's good to keep your hands in your pocket and just say, I'm going to wait and see what it all does. The market is widely expecting a 50 basis point hike and about $100 billion a month in runoff of the balance sheet. When we take a look at the stock index, it is certainly in a downtrend. It is up for the week now 1.14%, but it could rally all the way to 4,400 and still have serious issues, as that's where the 18-week average of closes is. You've had a stepping ladder effect to the downside. You've had a recent bounce. You'd have to get over this number, the 43, to be exact, 43.03.5 to negate the downtrend and break the pattern of lower highs and lower lows. If you did that, you'd probably go to wherever the 18-day average is, about 9 points higher, and I think you would run into a brick wall at that number. That doesn't mean it's a short sale area. Right now, the trend is down. Taking out that 43.03.5 neutralizes this bear trend. You've got the market moving to the right-hand side of the Bollinger Bands, and you're oversold. The oversold theme is clear as can be in this market, in your NASDAQ, same pattern, identical. Even if you clear this high, you got resistance at the 18-day average of closes, and the Dow, much more similar here. Whoops, I can't make that move. They did an update on the charting software, and I'm not liking it. Different things happen to it, and I'm not certain that I like that at all. And you have just lost, here it does work, you had an embedded reading in the Russell. Now I want you to watch this. When you lose it by getting a settlement in over 21, which you did today, Tuesday, and you don't break back right away, often it is a sign, very often, that you're going to make a run to the 18-day average, which gives me a thought process in place now that it's the one maybe flashing that, hey, this could be a time to be on the sideline and see what happens. If you get a rally in stock indices, you'll break in the cash VIX. In the T-bond market, lower highs, right? Well, actually you have a lower low and a higher high. You don't have a trend in place. Now, you do in the 10-year note, but how many times do you want to keep hitting the lower Bollinger Band? That's been the target. You're oversold, not embedded. I think the smart money has gone sideline for the moment. Dollar index is still embedded until the red line closes under 79. I contend on hard breaks. The trade is going to buy this market, but maybe not in front of the FOMC meeting. They might go on pause tomorrow on a break and say, let's see what that does before we put on any more contracts. In the euro, it's the flip-flop, but the same thing. Bearish and rallies are to be sold, but you might want to wait until you see how the market reacts to the FOMC. Then we get to the British pound, which is bearish. Look at this, embedded. Looks to me like it's still headed down. Could go to the 123 level. When we come over to Bitcoin, I don't know, the chart exploded in size. But as you can see, you're still in a bear market. You could be headed to the 37,000 level in this. Now we get to the Brent versus WTI crude. That is still bearish. The API numbers that came out today showed a net draw of all the distillates, gasoline, and crude itself of over 12.5 million barrels. That's friendly. And the market is up tonight about 90 cents on that news already in the Brent. WTI is up $1 a barrel on that. You're up in the heating oil right now about 2.5 cents because of that as well. Still an embedded reading. If the red line closes under 79, time to be gone. If it doesn't, you could be going up to challenge the upper Bollinger Band again. And in natural gas today, I think the pros took money off the table. You went right to where I teach you. That's where I think the pros take money off, just the way they, well, here they didn't, but here you were coming out of a tight band. This is very different action. You have a real wide Bollinger Band, so you treat that different. You know, I talk and teach a lot of this in my live webinar that is going to be this Thursday. So if you want to attend and you didn't get an invite already, it means you're not on my mailing list, do this. Just take your cursor, move it up right here. You'll see an icon. click on it, fill out the form, and away you go. If you have questions for me, when you get back, after you fill out the form, you're going to get your password to get into the chart room, along with the link to get in it. But in that receipt, you're going to see there's my name with my email address. Click on it, write me any questions you want, give me a chance, and I'll create the charts, and we'll answer them right there live. I'm Ira Epstein. You have a great day. I'll see you all tomorrow.